prediction markets reached a new monthly volume record of $28.4 billion in May, according to data from Artemis. This number tops the previous high of $27.1 billion set in January and marks 4 consecutive months with higher volumes. The streak itself says more than the headline number does. January's spike fed off election cycle leftovers and New Year positioning. May, on the other hand, did not really have any equivalent catalyst and still beat it. This suggests that activity on prediction market platforms is shifting from sudden spikes based on events toward a steady floor. The idea of these markets being a venue for occasional curiosity is gradually moving to an always-on space. Kalshi recorded $17.3 billion in volume last month. This is a monthly record in itself for the platform and a 29% increase in volume over the previous month. What's more noteworthy is the fact that about 61% of all volume came from Kalshi, and it processed nearly twice the volume of Polymarket, which saw $8.4 billion. Taken together, however, the duopoly is still there as both these platforms. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Made up close to 90% of the trading volume in May. If we go back to a year ago, this split between the two largest platforms would have read backwards. Polymarket built the category and held market dominance all the way from 2024 up until September 2025, when Kalshi tipped the scales. We tracked the same reversal inside crypto-themed contracts earlier this month, where Kalshi's share went vertical from February on. The reason for this flip is actually quite comprehensible. Kalshi's regulated U.S. status has helped drive its sports business, which carries most of its volume. Conversely, Polymarket was mired in a host of regulatory obstacles through large parts of the last quarter. This is a clear indicator of how regulation is reshaping the competitive landscape in prediction markets. Kalshi's ability to operate within a legal framework in the U.S. has given it a unique edge, especially in high-volume categories like sports betting. Polymarket, while still a major player, has struggled with uncertainty in regulatory environments, which has likely impacted trader confidence and volume flow. The shift in volume from Polymarket to Kalshi is not just a one-off event, but a trend that has been building for months. This trend suggests that traders are increasingly prioritizing platforms that offer legal clarity and regulatory compliance. As more traders seek out regulated venues, the balance of power in prediction markets is shifting. The next signal to watch is whether Kalshi can maintain this momentum, or if Polymarket can regain some of its lost ground through regulatory clarity or product innovation. The broader question is whether the steady floor in prediction market activity. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Is here to stay, or if it will eventually give way to another event-driven spike. The fact that May's volume was achieved without a major external catalyst is a strong signal that prediction markets are evolving into a more institutionalized and continuous trading space. The next signal to watch is whether Kalshi's regulated advantage will continue to attract volume, or if the market will diversify further with new platforms entering the space. The stakes are high as prediction markets become a more integral part of the broader crypto and financial ecosystem.